Okay, council, members of committee, the audio is now on. Good afternoon, ladies and gentlemen. I see that we have quorum and I call this Town of Pelham Audit Committee meeting of May 13, 2019 to order. We will begin by appointing a chair to this committee. I call for nominations for the position of chair. Yes?
I nominate Mr. Wink, Councillor Wink.
I second that.
Okay, I call for nominations of the position of chair. Is there a second nomination to be made?
Going, gone.
Okay, I will call for a third time for nominations of the position of chair. Is there a third nomination? Okay. Councillor Wink, do you accept the position of chair to this committee?
Yes, I do.
I have a motion on the floor that Councillor Wink be appointed as chair of the Pelham Audit Committee. May I have the vote, please? In favor? Any against? The motion passes. Councillor Wink, if you would like to come and join me.
Okay.
Get to your crown now.
That's right.
Power seat.
Where's the chains?
Yeah, and chain of office. Think of that, eh? Dun, dun, dun.
There you go. The Chairman Wink.
For you, Mr. Chair, these are your motions.
Okay, so what we have in front of us is a motion that the agenda for May 13th, 2019 regular meeting of the Pelham Audit Committee be adopted as circulated. Motion put forward by Councillor Stewart. Any additions to the agenda? Do you want to add new business?
Oh, after you, Mr. Chair. Thanks for the prompt. Yes, for new business, to make an amendment to the terms of reference going forward with regards to the number of councillors that would be on the committee.
Okay.
So,
we
maybe
will-
some discussion with regards to that.
Do we need further acceptance of that, or?
You call the question? Call the vote?
Yes, so do we have support for that to recommend a change to the terms of reference or discussion with respect to it? And we'll do that under 6.3. All in favor? So carried.
Disclosure of pecuniary interest.
Yep. Okay, and does anyone have a declaration of pecuniary interest? Seeing none, we'll move forward. So since this is our first meeting, and actually I'd like to welcome Bill and Mike to the committee. Thank you for stepping forward and assisting us with this. Very much appreciated, so thank you.
Thank you so much.
Happy to be here.
Okay, so moving on to new business, report on audited financial statements, and we don't need this yet, do we?
No, we'll hear the presentation.
Okay, so Mr. Ferguson, if you'd like to make your presentation, please.
Thank you very much for having me. Good afternoon, everyone. My name is Trevor Ferguson. I'm the partner with Deloitte in charge of the audit of the town's financial statements. So I think you've given me great power with the computer here, so I appreciate such power, and I'll use it wisely. So what we have in front of you here is our results report on the town's financial statements for the 2018 year end. I'll go through this at a pretty high level, but I would intend for this discussion to be informal, given it is a committee. Please, no need to wait till the end to ask your questions. We can just fire away, and I'm happy to take any of your questions as we go through. So, there we go. I should maybe before I get started, the first thing I want to do is just to thank Teresa and Charlotte and the team for all the hard work that they did preparing for the audit. And during the audit, we asked a lot of questions, and they gave us a lot of answers and a lot of support for those answers. So first of all, just wanted to start by saying thank you. We appreciate all the support that we got. I am not used to having a camera taking my picture while I present, but I'll just keep on going. What we're doing over the next couple of pages is just to walk through our audit process at a pretty high level. So what we'll do here is just talk about a few things, and again, happy to take any questions. So in terms of our audit scope, in terms of engagement, we performed our audit of the town's financial statements exactly in accordance with the audit plan that was presented to you, and the agreement that we had signed a few years ago. So no changes in the plan, the approach, and our terms and conditions, anything like that. I'll skip over the audit risk section for now, because I'm going to get into a little bit more detail on that in a few minutes. So I'll skip over that. In terms of, sorry, that picture process really threw me off. I'm usually a pretty calm presenter. In terms of materiality, so obviously we're not on site every day auditing every transaction that happens over the course of the audit. So we do perform our audit with the concept of materiality in mind. We used total revenues as the basis for calculating our materiality. We have a performance materiality, which is a fair bit lower than that, and a threshold of 5% of our materiality. And if we identified anything above that threshold, we'd be bringing it to your attention as part of this meeting today. If I were in your shoes as committee members, it's that threshold I'd really be interested in, and whether or not there's anything that the auditors have to report to you. And as you can see from the next page, on the top right-hand page is a little box called misstatements, and as you can see, there are none. So we have nothing to report to you. There are no corrected or uncorrected misstatements identified as part of our audit, so we're happy to bring that to your attention. The other thing I would point out on this page with respect to misstatements is around disclosure misstatements. That's on the bottom right-hand corner of the page. What we're saying here is that there are no disclosure misstatements in your financial statements. So what that means is that in our opinion, the town's financial statements disclose everything that they're required to in accordance with Canadian public sector accounting standards. In terms of status and outstanding matters, there are a few points that are outstanding at this point, and that's entirely because the financial statements haven't been approved by council. Once they're approved by council, then we can take care of these three items, being getting the signed management representation letter from management, completing our legal response review, and updating subsequent events. We have absolutely everything that we need from management at this stage, up to this point, and as far as our audit's concerned. And that's about it that'll bring to your attention on this page. So fraud, risk, and independence, that's at the top of this page. So as the external auditors for the town, we're required to consider the risk of fraud in your financial statements. So I know fraud's a scary word. It's not meant to be scary, and it's not specific to the town. It's specific to any audit that's conducted under Canadian audit standards, including the town. So I won't go through all the procedures that we performed. I did talk about them as part of our audit plan process. I can get into it a little bit as one of our audit risks is around management override and control, so I can speak to that in a minute in terms of some of the procedures that we perform. Needless to say, we did everything that we said we would do, and we did not identify anything unusual whatsoever. With respect to independence, obviously we're required to be independent in order to be able to provide the town an independent auditor's report. I'm here today to confirm that we are independent, and we'll be providing you that report once the financial statements are approved by council and we take care of those outstanding items. In terms of significant accounting practices, judgments, and estimates, there are a few estimates that go into the preparation of the town's financial statements. So some of the bigger ones would be around an employee future benefits liability, accrued liabilities, allowance for doubtful accounts, amortization of tangible capital assets, things like that. Those are some of the bigger estimates that go into the preparation of the town's financial statements. So we believe that management's process for developing those estimates is appropriate, and we believe that the estimates themselves are reasonable. So in conclusion here, you can see we intend on issuing an unmodified report on the town's financial statements once those outstanding items are taken care of. So now in terms of audit risks, over the next 3 pages, what we've done here is take some of the audit risks, or all the audit risks that we identified in our audit plan, and we've brought them to your attention here, and what we've done is added a column on the right-hand side for audit results. So So just as a bit of a reminder, this is by no means a comprehensive list of all the audit risks on our file. This is just some of them that we wanted to, some of the more significant ones that we wanted to bring to your attention. As you can see, for all of the items in terms of our audit results, you can see that the response is that there were no significant issues noted as a result of your testing. So again, that's a very good thing. So no concerns from us from an audit perspective. Once again, just in terms of significant accounting practices, judgments, and estimates, there were a few new accounting standards that the town implemented this year as required under Canadian Public Sector Accounting Standards. They're listed here just in the middle of the page on those 5 bullet points. Management did an analysis of the impact of those standards. We reviewed that analysis and we agreed with management that there would be no impact to the town's financial statements as a result of the implementation of these standards. That seems to be the case for quite a number of municipalities, for any of you interested. But nevertheless, the effort and exercise was done. We don't believe that there were any additional disclosures needed in your financial statements. I'm going to skip over this because I'll get to it here. In terms of Appendix 1, so over the course of 2 pages, what we're doing here is listing the 20 communication requirements directly out of Canadian audit standards. Again, those were in the audit plan that we presented to you. And what we've done down the right-hand side is just to tell you where we've told you about these items. For all of them, you can see that they're either referenced to our engagement letter, our audit plan, or elsewhere in this document that we're presenting here. And a number of these items are identified as being none or none noted, which is always a good thing coming from your auditor. Appendix 2 is the aforementioned independence letter. You may be interested to know that we're actually not required to provide the town with an independence letter. It's only required for public companies or listed entities. That said, we've done it in the past and will continue to do so because we believe it's a best practice. So it's there to formally state that we're independent. The last appendix we have here is just a draft management representation letter. Audit standards require that we show the committee a copy of the representation letter that we'll be asking management to sign off on. So that's here for your reading pleasure. If you're having trouble sleeping tonight, give it a read. But there are no unusual representations in this letter. It's very straightforward, nothing specific or unique to the town. So that is the appendix. Is just some resources for the committee members. Some may be interested in some corporate governance best practice things that Deloitte has for you. So I went through that pretty quickly, I understand, but I'm happy to take any questions on the audit results presentation itself, or we can just get into the financial statements if that's what you wish.
To you, Mr.
Sorry.
Go ahead.
I wanted to ask about materiality.
Yep.
So 5% of revenue.
No, our materiality was 3% of revenue, so about $700,000. And we have a threshold of 5% of that, which works out to, I wrote it down, $35,000. So that was our threshold of reporting misstatements to the committee. So if we found a misstatement for $20,000, for example, we would not be bringing it forward to you. Anything above that $35,000, we'd be telling you about it today.
So does that set a limit on a transaction level that you're looking at then, or not?
No.
That's just materiality.
Yeah, 700 is the materiality. So we have a performance materiality, which is substantially below that, and it's that performance materiality that we use to calculate samples and thresholds and things like that. And if we identify a misstatement as part of that process that's over that, then we'd be telling you about it.
To you, Mr. Chair. How many days did it take you to do the audit?
The team was here, a team of 3 people was here for 2 weeks at year end, and there was some time for a planning portion of the audit at an interim. I think we were here for 3 days. I think it was 2 or 3 people for 3 days for an interim process as well.
Thank you.
Any other questions? No? All right, so do you want to move along?
Is it easy
hang
enough
on.
to find the statements?
Sorry.
There we go. I got it.
I can't do this. Or I shouldn't do
Oh,
that.
sorry, would you be able to?
Sure.
Sorry, Trevor.
Problem.
Thank you very much.
Okay, so agenda number 6.1, report on the audited financial statements dated May 13th, 2019, that the Pelham Audit Committee received the 2018 Deloitte report for information. All those in favor? Carried. Thank you. And, yeah. So, go ahead,
Right.
Trevor. Thanks.
Management asked me to present the financial statements, so I will, hopefully closing that will help. I'm gonna get rid of this on the right-hand side, I'm sorry, otherwise I would to make it bigger.
A little arrow, see in the gray, there's a little tiny arrow, see where it says redact? Go down where it says redact, and there's a little arrow. Click on that guy.
There we go. Thank you. So these are the town's financial statements for the year ended December 31st, 2018. As you can see, there's a big draft watermark up the middle because the statements aren't final as yet. So as we scroll in here, hopefully I'll see some stuff on the page. Maybe I need to scroll a little slower. I don't know, this isn't my file. It's a beautiful cover page.
Visible.
Through you, Mr. Chair. Excuse me, Trevor, can I ask a question already? Taxes receivable, I noticed they went down in 2018 from 2017. I presume you're going to get into those numbers.
I'll present the statements. They are, and I was just gonna just do a little intro. So the financial statements are management's financial statements. So at the front of the financial statements, you'll find our independent auditor's report. That's what we do. So that 2 pages independent auditor's report, that's us, that's Deloitte. The rest of the statements are management's. So I'm happy to present them and go through, but in terms of any questions, anybody has any variances and whatnot, I've management prepared a report. Thank you very much. That describes some of those variances, but I would recommend that they be addressed, any of those questions be addressed to management and not
Thank
me
you.
as your auditor.
Yep.
There we go. Is that okay? That size for everybody? It's still a little tiny, but I can blow things up as people may need. So this is our independent auditor's report. This is what I was referring to that goes at the front of the town's financial statements. For any of you looking at last year's financial statements of any organization, you'll note that this report looks very different. That's because Canadian audit standards changed, specifically around the wording required in an independent auditor's report. So you'll notice that the opinion paragraph is now first. This is very exciting for auditors. We're changing where the opinion is, so just humor me. This is auditor jokes, you're supposed to laugh. I'm trying. So the opinion paragraph is at the front. That says the outcome of the audit. And then we go through the basis for that opinion. And this report, compared to the old one, goes into a little bit more detail around management responsibilities, around the responsibilities of those charged with governance, being council. It goes into a little bit more detail around going concern. That was never really in an auditor's report before. That's required to be there. And there's a few more bullet points on the second page that are all around there, around the work that we do around internal controls, a little bit more around going concern. And the last bullet point touches upon the fact that this is considered to be a group audit, given the town's consolidation of Peninsula West Power Inc. So that's here, and this will be signed with the Deloitte LLP signature once the statements are approved and we take care of those outstanding items. Now you look like you have a question. Yeah, you look like you had a question. Fire away.
I know, well, we talked beforehand already because I'm on the Penn Westwood board, and I know that we've had a presentation by auditors, but their financials aren't complete till we have our final meeting, which is this coming Wednesday. And I know it's included here. I know, maybe you want to explain to the rest of them why that isn't necessarily a final report in the auditor's report for the town of Pelham.
Sure, no, yeah, and just for the benefit of everybody, as we discussed in the smaller room in there. So the Peninsula West Power statements aren't final yet. But the town's ownership of Peninsula West Power is not material to the town's financial statements. So we've got a draft of those statements. So we believe that there probably aren't going to be any adjustments. And as you said, they've already been presented to the committee. So we're able to go ahead and finalize the town's financial statements in final form, again, once the council approves and all those kinds of things, without having the Peninsula West statements final, because it's not material. Any potential change to those statements will not materially impact the town's consolidated financial statements.
Thank you.
So Trevor, just a quick question then. So you mentioned that the actual financial statements are prepared by management.
Correct.
So once management's prepared those financial statements, then your staff review the financial statements for materiality. Is that correct?
Yeah, we perform our audit. The purpose of our audit is to determine whether the financial statements are prepared in all material respects in accordance with Canadian public sector accounting standards.
Okay.
So
Thank you.
That's what we do.
Yep.
So this is the town's statement of financial position, often referred to as the balance sheet. It doesn't balance because public sector balance sheets don't balance. Under public sector accounting standards, you've got your financial assets at the top, liabilities in the middle, and your net financial and your non-financial assets at the bottom. So at the bottom half, that's where you'll see the town's tangible capital assets and prepaid expenses. The other thing you might notice in terms of a difference between these statements and a corporate financial statement you might be interested or might typically see is that there's no differentiation between current and long-term assets or current and long-term liabilities. So for example, in the middle section under liabilities, the second last line, you'll see long-term debt. Well, that's in the same section as you'll find accounts payable and accrued liabilities. Typically in a for-profit, you'd see that separated out, but that's not public sector accounting standards, so that's why it's presented like this here in your statements. Again, that's similar to any other municipality. One of the things that some readers of financial statements, of municipal financial statements might focus on is the net debt of the region, of the town. And as you can see, the net debt of the town increased roughly $10 million year over year from 2017 to 2018. But if you go one line down, tangible capital assets, you'll see that your tangible capital assets went up $10 million year over year. So that largely explains where that net debt came from, if you will. So if you look at the bottom, the town's accumulated surplus is nearly identical year over year.
So Trevor, as we're going through these, obviously these are management numbers, and if we have questions on each page, can we fire away?
Whatever you want.
Okay,
Yep.
great. I'll throw one out under financial assets, tangible capital assets held for sale. I'm a little confused with this because we've got considerable land holdings for sale, yet it shows tangible capital assets held for sale of only $361,000, and additionally that declined by $520,000 year over year. So just like a quick explanation on that.
So through you, Mr. Chair, I don't know if everyone has seen the management summary notes of the financial statements. They were attached to the presentation, but on there, we did address that. So this represents the East Fawn Hill lands of $90,000 and the 1120 Hay Street lands of $271,000. So the decrease compared to 2017 is a result from the sale of the Wellspring remnant land. The net book value of the East Fawn Hill lands are based on the town's accounting records. The net book value would have been determined based on the best information that was available when the public sector accounting standard for the tangible capital assets was implemented in 2009. So that's the book value that we had. So even though we know that those lands in East Fawn Hill are, appraised at close to $12 million, this is the information that we have in our records, and that's why the land held for sale is so low.
So book value then?
It's the book
Yeah,
value,
that's
yes.
fine. Thanks.
Through you, Mr. Chair.
Yes.
Through our treasurer, taxes receivable. It's hard for me to imagine the taxes receivable went down in 2018 from 2017.
The actual taxes receivable?
Correct.
Yes, and that has to do with the collections from the tax clerk. So she's been In the last couple of years, we have decreased taxes receivable because of the initiatives that she has implemented in making phone calls and follow-ups and trying to get people to, if they're starting to fall behind in their arrears, she's calling them and asking them to, come up with payment plans. So it's being the proactive towards the collection of the receivables.
Can I help with that a little bit? It's not taxes billed.
I know
It's
it's taxes.
taxes that have not been paid.
Correct.
Right.
Which means they're collecting better than we were
Oh,
before.
yes, yeah, for
Right.
sure. Yep.
But still a large number. Or am I interpreting it wrong?
Well, if you look at the total revenue for taxes, which is $13 million, that's the total revenue for the year.
Right.
It seems like a high number, but in comparison to this number as a percentage of the revenue, it actually is lower, and the collections are better.
Thanks.
So through you, Mr. Mayor, or Chairman, the liability with the bank indebtedness, it obviously went up about $13 million. Is that a long-term, short-term?
So through you, Mr. Chair, that pertains to the short-term construction bridge loan of $13.5 million. So that's because it's short-term, that's why it's under bank indebtedness. When we sell the East Fawn Hill lands, we're going to be paying off the majority of the $13.5 million.
Through you, Mr. Chair, I know we talked about this previously in council, and we said that, did we get an extension on that? I know there was a due date of
Yep.
March 30th. I apologize if I don't get my dates right, but did we get an extension on that?
So through you, Mr. Chair, the extension is April of 2020. So they've acknowledged the issues that we had with the selling of the land, and they've given us up to that point to pay back the short-term bridge loan or take out a debenture.
And through you, Mr. Chair, what's the difference in rates? Is it higher for short-term or
It would be a bit higher.
for short-term? Or,
Well, it's actually the notes. Okay, just a minute.
and through you, the only reason we're keeping it short is we don't want to go over the 27% or 29%?
Well, through you, Mr. Chair, the plan for the Meridian Community Center was that $12 million of the $36 million was the land sale. So if we had sold the land in the period that it was projected, we wouldn't have taken that loan out at all. So it was never part of the financing, it was just an interim measure. So I'm just looking at the rates.
So, through you, Mr. Mayor, the short-term borrowing is at a variable rate right now. The latest correspondence we had with them, the variable rate is slightly lower than what the fixed rates will be when you lock in. But what the rate will be at that time, we can't say right now with certainty. It depends on what happens to interest rates over the next little while, but we are at a variable rate right now.
Yeah.
So in terms of I'm assuming there's no other questions on the statement of financial position. In terms of the statement of operations, often referred to as the income statement, as you can see, the town's revenues were relatively flat year over year. In terms of expenses, there was an uptick in expenses year over year, and that resulted in an annual surplus of just under $100,000, and that compares to $3.2 million from the prior year. And that $97,000 annual surplus directly increases last year's opening accumulated surplus, resulting in your year-end accumulated surplus being about $100,000 higher. So.
Okay, so I'll ask a question. So the budget for 2018, the expenses were budgeted for $21.7 million, yet Our expenses were almost $24.5 million. Can you please explain the large discrepancy between actual and budget?
Through you, Mr. Chair. If you look at the revenue as well, the revenue was budgeted at 23.2 and it came in at 24.5. And so you see an increase in the revenue and an increase in the expenses. On the summary notes that I provided, it highlighted the major differences of the additional expenditures that we had this year. So some of them pertain to, legal settlements, was $500,000 for that. So even though the expenses look higher, in some cases, the revenues is high as well. So in the water, wastewater, we had higher revenues, and then we also had higher expenses. So you'll see that. But in the notes, it lists all the variances of why we've gone up or down in the expenses.
Through you, Mr. Chair, I'm looking at expenses and transportation services. We're talking over $1 million.
Yep. Through you, Mr. Chair, the increase from the budget relates to the budgeted items that were in the capital budget, but then they were expensed due to the nature of the financial statement purposes. So there's about $1 million worth of expenses. A lot of them pertain to the Meridian Community Center. So these are things that they would have been part of the capital budget, but when it comes to the accounting, they didn't meet the criteria to capitalize them, so they were expensed.
So transportation and the MCC, how do they go together? Through you, Mr. Chair.
Okay, sorry, this one here. This one here pertains to road-based services and repairs. So a lot of I'm sorry, that was the wrong expense.
Okay, I'm
that one.
sorry.
Yeah, so a lot of these were, they were budgeting the capital budget for road services and repairs, but actually they fit under repairs and maintenance in nature under an operating line.
So transportation services are not public transit?
No, it's public works.
Yeah.
Okay.
Yeah, it's public works, roads.
Okay.
And environmental services are the water, wastewater. So in the back of the financial statements, there's an explanation of what the categories, which departments are in the various categories. And we have to follow the financial information return categories as set out by the ministry. That's why you'll see that. Health services are really cemeteries.
Yeah, through you, Mr. Chair. The same thing would apply there to recreation and culture services. It was budgeted at $5.2 million and it came in at $6.15 million.
Yep, so so this one here, the increase from the budget is due to the following increase for the MCC. So the capital items expensed of $160,000, hydro increase of $190,000. The amortization expense was higher by $400,000. Bank charges relating to the short-term borrowing was $190,000. This was also covered by the MCC reserve. Additional expenses include removal of the ash trees in the parks of $80,000. These are normally budgeted in the capital budget, but for financial statement purposes, they're expensed. And there was the grand opening of the MCC of $70,000, and the majority of that revenue is sitting in the revenue line, in the revenue section. And there was also budget savings from facilities wages of $135,000.
So through you, Mr. Chair, so for that recreation and culture services related to the MCC, how much of that you think is over budget? Approximately $800,000?
No. Well, with the amortization expense, that's, the hydro is $190, and the capital items expense, they're not over budget. They were in the original budget for capital of the $36 million, but then we have to show them as operating, so it's not being over budget. It's going from the capital budget to the operating budget, so it's not, we're not over budget. The amortization expense is something we don't budget for. We don't budget for amortization because we budget it on a modified cash basis. So this is just an additional expense showing up on the statement. So right now, it looks like it's the $190,000 for the hydro that we're over. And then we have the short-term borrowing of $190,000, but that's covered by the reserve.
In the grand opening?
But that's covered, most of it's covered by additional revenues.
Additional revenues?
Yes, but go ahead, Charlotte.
Through you, Mr. Mayor, I just wanted to add that for the amortization, we do a report to council where we explain that amortization and post-employment benefits have been excluded from the budget because it's a modified cash basis. But we do provide in that report an estimate of amortization, and that's what we include in the statements. When we prepared that estimate last year, we didn't know what the components would be of the Meridian Community Center. So we did give a slight increase for an estimate of amortization. It just wasn't high enough. So at the end of the day, you have to look at major components like your HVAC system, for example, your roof, and then you amortize them over their useful life. So when we calculated the final amortization on the MCC, it was just higher than what the amount was we estimated while it was still under construction.
Thank you.
Question through you, Mr. Chair. So understanding a lot of these variances are being kicked out based on a difference between capital budget and operating budget, is your budget being recalibrated to kind of for, I guess, 19 fiscal year in order to ensure that the budget is reflective of where the appropriate expenditure would reside?
So I think there's, through you, Mr. Chair, this year was a bit of an anomaly with the MCC coming on board, the 2018, in July of 2018, we got the new community center. So normally when we have the capital budget, most of the items on there are capital. So I think this year, because of the new community center and it was the community center and other items as well, there was just more items that were expense as opposed to capitalized. But in the past, we haven't had such large variances.
Right. So through you, Mr. Mayor, or Mr. Chair, I said mayor earlier, the amortization estimate for 2019 is higher than, or it's approximately close to the amortization in the financial statements for this year. We actually had originally estimated it in that budget to PSAB reconciliation a little bit lower than it should have been, and then when we saw the financial statements, the report that went forward to council increased that estimate slightly. However, there will always be some variance when we expense items that are a part of the capital budget. So we present the budget in a way that shows council the operating budget that they've approved, the water and wastewater budget and the library budget, and then it shows the capital budget as acquisition of capital assets on the statement of changes of net debt. So anytime we expense something that was in the capital budget that doesn't meet that criteria for financial statement purposes, it will be a variance that would just have to be explained. So we don't make an adjustment for that because it is budgeted for in the capital budget. It just doesn't show up as an expense budget in the financial statements.
So just a question for Bill and Michael. Have you been provided the operating and capital budgets for 2019? Could we ensure that happens, please?
And then, sorry, Mr. Chair, just one follow-up question on that. So in relation to the on-time and on-budget notation for the MCC, does that include both the capital expenses and operating, all under how it was budgeted from a capital perspective?
Yeah, so through you, Mr. Chair, that pertains to the capital budget. The operating budget was separate. So the capital budget was under budget. The operating budget for the MCC for the first 6 months did not equal the pro forma. It was over budget.
The combination of the two, understanding you tend to budget capital and things have fallen into operating from a totality perspective, is the town in line with the approved budget for MCC, or?
So the town was in line for the capital, the actual building of the facility. We were under.
Yeah.
but the operations for the first 6 months, the budget was short. We were over budget. So the pro forma,
Yeah, so I guess,
so, you know,
so
we
the
don't, we
underage on the
don't, we
capital,
don't combine the two of those. Yeah.
was the underage on the capital offsetting the overage
Oh,
on the
yeah, so
operating? Sorry.
the savings in the capital was much higher than the overage in the operating, yes.
Okay,
Yes. We had about $500,000 of savings in the capital, and we were over, just the amounts that we have here. So yes, it did cover it.
okay. Thank you.
Okay. Yes.
Through you, Mr. Mayor. I don't quite understand, and that's because of my industrial background. Usually when things are capital, they're capital. When they're expense, they're expense. And that's the way the budgets are created. We don't mix the two. And if a budget is prepared like that, well, then somebody's got a problem.
Through you, Mr. Mayor, some examples, the biggest one that you're seeing in transportation services would be something like road rehabilitation. So for accounting purposes, you have to determine whether it's considered a betterment and whether it extends the useful life or the efficiency, or there's several criteria of that capital asset. If it's more of a routine repair and maintenance that maintains the same useful life of the asset but has repaired it, then you wouldn't capitalize it and add it as an asset in your financial statements. So those would be examples that in our capital budget, we include items like road rehabilitations and, roadside ditching, items like that that are larger dollar items that are in our capital budget, but when we put them through the financial statements, they don't meet the criteria of a tangible capital asset, and so then they're hitting the expense line.
So through you, Mr. Mayor, or through you, Mr. Chair, so $6.8 million, what does that consist of? Because I don't see $6.8 million spent in our community on roads. I know there was one road constructed. Is that a big portion of that? And what portion is the $6.8 million?
So, through you, Mr. Chair, I would direct you to Schedule 3. And in that schedule, under Transportation Services, it shows that of that 6.8 million, almost 3.2 million of it is amortization of tangible capital assets. So, so it's on the screen here. So this is the 6.8 million, and this is everything that it's made up of. So there are salaries and wages, interest on long-term debt, materials, contracted services, and then the big dollar item is amortization. So roads that have been built in previous years and their cost is being allocated over their useful life, and that's the expense that you're seeing in the financial statements.
Any other questions on that page? Sorry, you could be standing up there for a while.
That's quite all right. So the consolidated statement of change in net debt, this is a unique statement to public sector accounting standards. You won't see this in a for-profit statement. What this is essentially doing is just reconciling the change in net debt year over year. So you can see the town's annual surplus of $97,000 at the top. This section here shows you all the changes in tangible capital assets over the course of the year. So you can see you purchased $15.6 million worth of tangible capital assets. Your amortization, that non-cash item, was $5.7 million, 3.2 of that being transportation that Charlotte just highlighted. So your net change in capital is around $9.6 million. Small change in prepaid expenses, and then you come to your net increase in net debt of $9.8 million. And if you really want to get excited, you go to the cash flow statement, which is the next statement. This is again auditor.
So through you, excuse me, I'm sorry.
Sure.
Through you, Mr. Chair, so from 2017 to 2018, we incurred $10 million debt. More. Okay.
If I may.
So, go ahead.
Sorry, so the net debt term in Canadian public sector accounting standards, that's the difference between the town's financial assets and all of its liabilities. So that's right on the statement of financial position as well. So just looking at it here, so the town's financial assets, so excluding tangible capital assets of $15.1 million, less the town's total liabilities of $56 million, come to your net debt of $41 million.
So
That's how that's calculated.
would a lot of that been attributed to the completion of the MCC?
It's a short-term borrowing.
Yeah.
It's all the MCC.
Okay, go ahead.
So in terms of the cash flow statement, the cash flow statement is broken out into three separate sections: operating activities, capital activities, and financing activities. So you can see in terms of operating activities, this is like the day-to-day activities of the town. The town generated nearly $1.5 million in cash over the course of the year. Through capital activities, again, you can see there was $15.6 million in capital assets purchased, so that was obviously a drain. And in terms of financing activities, it being the increase in short-term debt that we just spoke to, there was an increase in cash flow of $11.6 million. The net result of that is a decrease in cash of $2.6 million from the town over year, resulting into an ending balance of $1.2 million.
So I have a question, and to you, Mr. Chair. So we, in 2017, we had $9.886 million, and then our cash, I presume that's cash flow, am I correct saying, of 1.44 million. So definitely a difference of, say, $6.5 million. So we spent more in 2018, am I correct saying that?
I think one of the bigger changes you might notice, if in the middle, there's a line accounts payable and accrued liabilities. So this year, your accounts payable and accrued liabilities went down by $5.7 million, and that could just be a result of timing of payments. So that's cash out the door.
So through you, Mr. Chair, the biggest difference here pertains to the building of the community center. So so the decrease in the accounts payable pertains to the community center and the payments. In the beginning of 2017, the cash included a debenture for the MCC in the amount of $2.9 million. So in 2017, at the end of December 31st, 2017, we had $2.9 million that was a debenture, whereas in 2018, we didn't have that. So that's part of the difference.
So through this, as a lay person, so really we have a $1.44 million in our bank account.
No, you have $1.28 million.
Yeah, so if you go to the-
Oh, at the very, okay, I'm sorry.
Yeah, very bottom.
Okay, so and I apologize, so in 2017, we had $3.8 million, and now we're down to $1.2 million.
Right,
Okay.
because of the $2.9 million difference in debenture that we had in 2017.
So does the cash and cash equivalents, does that include reserves? At the very bottom there?
That's all our cash.
So that includes our reserves.
Right, but we also have a bank indebtedness, so if you look at that, we offset that.
Councilor Chol.
Through you, Mr. Chair. Under deposits and deferred revenue, that's a substantial difference there too. It's about $1.1 million in difference from 2018 to 2017.
If I may, sorry.
Yeah.
So looking at variances on the cash flow was really difficult, because in the 2017 column, so that $1.2 million you're referring to in the 27, what that is the difference on the balance sheet from 2017 to 2016. So that's what that $1.2 million is, and
Okay.
and the $104,000 is the difference between 2017 and 2018. So if I were you, and looking at a cash flow statement, I wouldn't compare variances year over year, because I know we're required to present it, so that's what the standards are, but they're not that valuable,
Okay.
I don't think, for some of those items.
Go ahead.
Okay. So the The rest of the statements, of the town statements, are largely comprised of the notes, which are prescribed disclosure, again, under Canadian Public Sector Accounting Standards. I'm not proposing to go through these notes. I'm happy to take any questions that anyone may have on them. They are standard notes, which did not change at all from last year, except for changes in the numbers themselves. And then there are a few schedules, as previously described, detailing out the town's tangible capital assets and the statement of operations in various segments, which we already did for transportation services. But I'm happy to go through anything or take any questions.
Councillor Hahn?
Through you, Mr. Chair, with regards to, it's on page 49, the airport, just want to be clear as to the numbers there. Those are final numbers for 2018? They're not, okay, because I'm on there and I'm thinking, I haven't seen that myself, so, okay. So that will be coming out shortly then, all right, that makes sense, thank you, because I couldn't, with what I have so far, nothing was jiving, so,
They're close.
good to know.
I happen to know the audit partner for the airport. He's smart and very good looking, and maybe in this room.
Nice.
So it's they're pretty close, but not quite done yet. But it's a very similar situation to Peninsula West Power, where if there was a change to these numbers, they would not materially impact the town's financial statements.
Great, thanks.
Any other questions? Mr. Ferguson? Yes, Mr.
I might have it. Through you, Mr. Chair. So with the cash flow up here of the 1.2 million and the bank indebtedness, where do we stand then today?
Like, what's the bank balance today?
Yeah, well, what kind of a position or would we be in?
Bank balance? Like, what position do we have? Like how this year is going to come out, like 2019?
Or, no, I think what Councillor Cholfie's saying is what's our bank outstandings right now? What's sitting in the account today?
As of May 13th,
Or even?
as of today?
Even the end of.
Call it end of
even
April.
the end of April, Charlotte.
Okay, just a second.
Like, what kind of position are we in? What's the total picture look like?
I can tell you. So through you, Mr. Chair. So we have, we prepare monthly cash flows. I mean, very detailed cash flows, obviously. And so you'll see the fluctuation. So for example, today I approved $3.8 million to pay property taxes to the region. You know, we collect the taxes on their behalf and then we remit that. So on Wednesday, $3.8 million is going to flow out to the region. So there's fluctuations. Right this year, as you recall, council approved $4 million of a new debenture to be issued in July. That's going to help the cash flow, and that's going to help with the replenishing of the cash that that we talked about previously, and helped build the reserves back. So what, do you have the balance there?
Yes, through you, Mr. Chair, the bank balance at April 30th was 5.5 million, but agreeing with what the treasurer was saying, a large portion of that is owing to the region for their property taxes. So we do pay more attention to our cash flow and what we anticipate the town's cash, free cash is versus just what the balance is in the bank at any particular point in time.
Okay, thanks.
So if I recall correctly, our line of credit with the bank has been reduced substantially as of December 31st, or am I wrong?
Yeah, so through you, Mr. Chair, the line of credit is at $7 million up until September, and then it reduces. So we have 50% of the tax base that we can borrow against, and we're just slightly, a little bit lower than that as far as the amount that we have for the line of credit.
So is that our limit, or?
That's our limit.
So what's outstanding on that line of credit?
Currently, there's nothing outstanding on the line of credit.
That's what I was getting at.
Yeah, so we don't have anything right now. We haven't had any throughout the whole year so far.
Yeah, great.
Which is wonderful because we're saving on interest expense.
So through you, Mr. Chair, on page 41, So am I right saying that in 2018, the city paid $914,000 for interest on the $30 million? On the very bottom, it says interest on long-term debt during the year.
Sorry, Counselor, what page was that?
That was on page 41.
Yeah, that's correct.
So we paid that,
Bottom of the note.
yeah. And that was for 2018. Close to $1 million just in interest payments.
That's correct.
Okay.
Questions?
I,
Yeah, go ahead, Bill.
I have one through you, Mr. Chair, and I think this might just be me not being familiar with these types of financial statements, but I know the reserve table, it's actually on page 44 of our book in the note disclosure. It seems like we borrow from reserve funds to do others. Is that common practice?
Yes.
It is, eh? Okay.
So through you, Mr. Chair, in the past, I don't know how many years ago, at one point, there were reserve funds where you actually had the cash to match the reserves, and then that changed. We are looking at bringing forward to council in the fall reserve policies. I think one of the things that the town is looking at is to ensure that we actually have the cash to equal the reserves. That's one of the goals for us when we start to replenish the cash, is that we actually have that money set aside. So that's one of the goals that we have,
I think that's a good practice.
yeah.
Through you, Mr. Chair, I was also going to add, we have reserve funds, which are in the obligatory deferred revenue category. So there are reserve funds, and then there are reserves, which are part of the accumulated surplus. I know we tend to use those terms interchangeably, but they are sort of different in our financial statements. So I just wanted to bring that to your attention as well.
Yeah, that was a question I had too, because I know that some reserves are obligatory,
That's right.
and those funds should not be taken from those funds. But I thought, looking at the financial statements in the past, some of those funds had been appropriated when they shouldn't have been. Is that true?
So through you, Mr. Chair, I'll respond to that. Yes, that is still allowable as long as you allocate interest to those funds. So we allocate interest to those funds. The goal for the town, and this is where, once again, that $4 million of the debenture is to replenish the obligatory reserves this year, because those were capital projects that were approved to be debentured. The projects were completed, but the debenture was not taken out. So this year in July, we're taking the debenture, and it'll help to replenish the funds that were borrowed internally to pay for those projects. So we're moving towards that. So the first thing that's being replenished this year are the obligatory reserves.
Thank you.
Yeah, through you, Mr. Chair, this would be a question to the interim CEO. So looking at our budget and looking at our financial statements and knowing what's possibly with the sales of the land in East Fawn Hill, how do you see us looking for by the end of the year? Any projections or?
Well, there's a couple unknowns. The big one has to do with the sale of 1120 Hay Street. So that will have an impact on the cash flows. So as you recall, we have $2.6 million of projects that were approved prior to 2018 that we're carrying forward to 2019. We're in the process of completing those projects. That was still part of these internal borings. So my goal has always been to, get caught up, and if we can sell the arena lands for, the $3 million, then we can take care of that outstanding liability and not impact the cash that we have, that we currently have. The funds that we have, the 2019 budget, it's on a cash modified basis, means that we will have enough cash this year in the budget to pay for all the things that were approved in 2019, because that's how the budget is structured. So just for Bill and Michael, In our budgets, we budget for the principal portions also of any debt. So you'll see the principal and the interest and other items. So anything to do with any cash, that's an outflow of cash, is in the budget. So that's how we budget. So as long as we stay within our budget, and there's no reason why we wouldn't stay within our budget, we won't have a shortfall of cash for 2019. I'm just trying to clean up the old stuff of 2018 and prior, and that's why it's critical for us to, if we're able to sell the surplus land for the 1120 Hay Street of the $3 million, then it won't impact the cash flow. If not, I'll be $2.6 million shorter at the end of this year on top of the other debt that's still being carried forward here. So it's just, it's a catch-up year this year that I'm hoping we can do.
So through you, Mr. Chair, then, the sale of 1120 Hay Street, the proceeds from that sale will only cover debt that was incurred in 2015, 16, 17, and 18.
Not debt, it will cover.
Expenses that were incurred.
Like capital projects.
So it'll have nothing to do with the MCC, it's only gonna
Yes.
cover up expenses that took place from 2015 to 2018.
Capital projects, that's correct. Yeah.
So we need to sell that to get caught up with
Yeah,
past debt.
then we're caught up with past obligations. So purchase orders have been issued, then all of the past projects will be caught up as far as the cash is concerned. Just for Bill and Michael, the internal boring that was done was for the development of East Fawn Hill. So some of the roads that were developed, the stormwater ponds. So these are things that the town upfronted the cost for, and then the money will be coming back from the developers once that area is developed. But the issue that we're facing is a timing issue of when the cash is coming back. So could be 3 to 5 years, it could be 5 to 7 years. That's the issue that we're having here, is the timing of that. But ultimately, when that money comes back, it will replenish all the cash.
So through you, Mr. Chair, once again, sorry to go back in this, so the money that we are on the shortfall for the purchase orders are out already from 2015, 16, 17, and 18. That 1120 will pay for. Are they shown in here anywhere? Are they broken down or in this report?
In the financial statements?
Yeah.
No. No, because they were outstanding as of December 31st. The costs have not been incurred yet. Like, the projects were approved by council to be completed, but they weren't. So there was $2.6 million left out of a list of 30 projects that will be completed this year. So, for example, completion of a road or something like that. So they're not in here. They'll be in 2019 as far as a capital item.
So those projects that the sale of that property will pay for, can some of those projects be deferred or removed if not deemed accessible, or they're already passed and started and gone?
Yeah, they're started. So the only one project that we were able to, there was 2 projects we were able to defer and move the money, was the $185,000, if you recall, that came to council for approval, was to put it towards the gas main on Station Street. So that was money that we moved, council approved to move the part of the funds from the $2.6 million to the project that's going on right now, because we were short on that. But other than that, all the other projects are committed and they're moving on.
So was it the intention when these projects were approved to be paid for by the sale of 1120 Hay Street?
No, because when they were approved in that year, they would have been approved through the capital budget. So it would have been the cash that would have been collected that year would have paid for those projects. So no, but then because of the shortfall, this is what's happening now. We're just catching up and cleaning up here.
So because of the shortfall,
Yes.
get rid of a property, pay off our
Is
shortfalls?
that the surplus for 1120 Hay Street, I mean, the sale of that land was never earmarked for anything. Like, it wasn't part of, the MCC, it was just separate. But after looking at all the outstanding items, it just makes sense that if that land could be sold, then that's another area where we can get cash to come back to the town and once again help with the cash flow. And that's the most critical thing right now is the cash flow.
Thank you.
And through you, Mr. Chair, so as a city, we have no extra money, 200,000 sitting in any other account. We can't afford anything. Is that what you're saying?
What I'm saying is we can only afford what we have approved in the 2019 budget.
So if we had, excuse me, through you, Mr. Chair, if there was a broken main, water main or something, we're gonna have to defer some of the projects?
Well, through you, Mr. Chair, we still have that line of credit as well. So we have a line of credit for an emergency right now. If we needed to spend something, we can.
But that will increase the capital,
Yeah, the debt, yeah.
the debt.
Yeah. Or you would defer, or next year, your capital would be less because you would have spent the money this year. So,
Mr. Chair, so if we were to say moth spraying, for example, we'd have to basically go and use some of our credit in order to even consider doing something along those lines, because that wasn't budgeted.
yeah, it's not budgeted. No, just the 25,000 was. Yeah.
So through you, Mr. Mayor, just to follow up on Councillor Corr's question, that we don't have any additional cash to do anything for an emergency, we'd have to go to a line of credit. Even if we do sell 1120 Hay Street, we'll still be in the same position, right? Because that money is going to be gone.
Right, but through you, Mr. Chair, don't forget, we're gonna start to, we're gonna get the $4 million from the debenture, but that represents the obligatory reserves. So we don't want to start borrowing against that. So once that money comes back, it has to be earmarked for the obligatory reserves and kept for that. So yes, the answer is yes, we won't have enough money. Until the money comes back from the developers, then we'll start to replenish the cash that way. That's where the real cash is coming back that we can actually spend on different things.
And when do you anticipate some of that money starting to come through? I know it always goes through when the town assumes the subdivision.
Well, some of it goes through to the building permit stage as well, so I'm not sure.
That,
But 3 to 5 years, I mean, it's not 3 years at the earliest.
is there like a schedule for that? So much a building permit, so much at start and so much at the end? Or can we change this so we can get more money up front?
Through you, Mr. Chair, I know some of the payments, such as parkland dedication payments, are specified in that bylaw. So it depends on the nature of the payment. Some of them are at time of development agreement, some of them are at time of subdivision agreement, and some of them are outlined in bylaw. So I would need to talk to the Director of Planning and Development to determine for sure, but I think most of them are specified already in specific documents. Whether that can be modified, I'm not sure.
It'd just be more cash flow for the town if we can get it.
I think right now, just my understanding is that the earliest that some of these developments are happening would be, 2 to 3 years. Like there's a lot of, the good news is, this is the wonderful news here, we have to sit back and, reflect on this, is that there's a lot of development happening here in Pelham. So it's not as if the money's not gonna come here, and Pelham is the second most popular place for people that wanna come and live here in the Niagara region. So we have a town that is very desirable. So it's not as if the properties won't sell. We just have to build them, and once that happens, they're gonna sell, and then we'll get our revenue, and we'll also get property taxes in perpetuity. So this is just, the period that we're going through.
Trevor, while we're going through this questioning, do you want to have a seat instead of standing up?
I just want to ask Trevor, can I ask Trevor a question? You see what we're going through because of the building of this MCC. Is that typical of what municipalities go through? I mean, the plan they had, I'm not sure.
Respond to that by saying that's outside of the terms of
I know, I understand that. But you see other municipalities' financial statements, right? And you audited them.
Yes. Yes, I do. So every municipality is unique. I don't think it's appropriate for me to comment on one of my clients versus another.
I understand. No, I understand. I just thought we have to go in the lunchroom and talk some more. I think.
I'll take you up on your offer just to have a seat. I'll stay.
Okay.
Through you, Mr. Chair, my final question. I know we talked about a ceiling of 29%. What happens if this town reaches or goes beyond that? Like, it's not the end of the world.
Well, through you, Mr. Chair.
27 or 29%.
So just for Bill and Michael, we have an annual repayment limit. There's an actual calculation by the ministry that we can't exceed 25% of our revenue for debt. Like, that's the interest and principal portions. So we're currently at, are we at 18? I think we're at 18%. And the question is, what happens if you go above? You would need the ministry's approval. So in some situations, for instance, I know that when Milton was going through that tremendous growth, they actually had ministry approval to go beyond the 25% because they knew that as soon as the development happened, then, you know, they would sell the property and then the amount would go down. So they knew it was temporary. So you would have to have approval. We
So
cannot
it's
exceed
not
that.
the stigma, through you, Mr. Chair, that we're bankrupt or anything.
No,
It's just-
we're not, no.
It's just that we're, and again, you're absolutely right. If you look around this great community, this growth, when's that growth coming? 3 to 4 years.
Yeah.
Okay, and I'd rather be in this position than not see contractors
Oh, yeah.
being built, so.
Yeah, the downside though is if we go through some form of a recession and things slow, and I don't have a crystal ball, but we haven't had a recession for a bit, so
Usually every 11 years.
2008, it's 11 years.
Okay.
So it's like a newlywed couple buying a $800,000 home and having a big mortgage, that's it.
Yeah.
The honeymoon ends.
Not all the time.
Oh, it does.
So I know this is a little off topic, but for the benefit of Michael and Bill, I think we need to do a solid orientation session for you to provide all your questions and the financial statements for this year going forward, you know, so maybe we can set some time aside to do that, so we're kind of partly in the dark, and I apologize for that.
Is perhaps there anything that we can provide them in the interim, so they could, like a takeaway from today that we?
Oh, yeah, we can provide them with our operating and capital budget going forward, and
Anything else that you want or
And
need?
through you,
or-
Mr. Chair, I can also meet with Michael and Bill. We can come down and we can go through the statements, go through the budget as well, and then you can ask questions to Charlotte and I. That'd be good?
Yeah, absolutely.
Okay, so we can do that.
Perfect, thank you.
Okay, yeah.
John Marion has.
yes, Mary Ann.
For you, Mr. Chairman, I know the planning department is self-funding, so so the money from the building permits and everything goes to them. So does any of it spill to other departments in the town, or we just wait for the tax revenues from the new builds?
Through you, Mr. Chair, the building department is self-sustaining and we are not allowed to use their revenues to offset any other expenses. So at the end of the year, we look at what their surplus is and it gets transferred into their reserve. Excuse me, so it's not used to subsidize anything in terms of the remainder of the operating budget. That all comes from the tax levy, grants, user fees in other departments. All of those expenses, water and wastewater, are also separate. So water, wastewater, and building department, whatever their net operating surplus or deficit is, it goes to or from their reserve, and then the remainder of the revenue and expenses are transferred into the working funds reserve if there's a surplus at the end of the year.
Thank you.
So, yes.
Through you, Mr. Chair. An area that I know I would appreciate this committee looking at, and that is our ownership in the electrical end of things, the utility company. And that I think it's one of these pages, 5 million or something like that somewhere. Just really looking at that closely to understand if that's something that we need to hang on to. Because here we are looking for dineros, and I'm not sure that there's any net benefit in hanging on to this, because I think a payout is only, what, $50,000 or something each year. So perhaps that's something that we can consider, but again, we need to really analyze that, and I don't have that background to be in the position to say, yeah, let's get rid of it. I think it's something we should look into.
Through you, Mr. Chair, we're meeting on Wednesday. It's a in-camera meeting, and the lawyers from Toronto are coming down, and I think the auditors are coming down. We're receiving the financial statements, and we're also the power company has held, the owner of us is NPEI, Negative Peninsula Energy Incorporated. So their chairman is going to be there, is giving a presentation. So I'll be asking a lot of questions. I'm not sure where it's all going to go, and we'll definitely talk about all kinds of things.
But you'll have the final statements at that point in time, so then that can be
We will
reviewed
have
by the committee.
we'll have the final statements, and I'll have a better understanding from, I'm able to explain to you where exactly we are, where we're going, and what they see going forward, because I brought up at the last meeting that amalgamation is big in the talks. And we know the port authorities are amalgamating now, and we're talking about amalgamation in the region. So I've already, at the last meeting, a month ago, I already advised them that amalgamation, they've got 7 utilities, minor utilities in the area. It's, there's a lot. So I'm not sure what's going on with all of these, and I don't know that anyone else does, but it's definitely on the table, and we will be talking about it.
Because I think there's an opportunity to look at that, because if it makes sense going down the road and we're like, let's get rid of that, that's $5 million or more and change, as opposed to perhaps unloading the old arena land and being in a panic to do so for money, because we might have $5 million or more looking at us in the face that we could use, so.
Somebody has to want to buy it. That's
Well, right now it's Lincoln and West Lincoln.
West Lincoln, Lincoln, and us.
Yeah.
That's right.
Okay.
Any other questions with respect to the financials? Okay, so then, agenda number 6.2, review of the financial statements dated May 13th, 2019. Be it resolved that the Pelham Audit Committee received the 2018 Pelham financial statements. Should we call that draft financial statements? And that committee hereby recommends the statements be submitted to council for approval. All those in favor? Any opposed? Hearing none. So moved.
Through you, Mr. Chair, I have a motion put forward by Councillor Hahn that the committee recommend to council to amend the Pelham Audit Committee terms of reference, membership from all members of council to blank members of council.
So,
discussion.
would you like to speak to that, Councillor Hahn, please?
Through you, Mr. Chair. Well, I think there should be some discussion here with my fellow councillors. I'm thinking no more than 3 councillors probably would make sense, but I'd like to hear what the rest of the folks here at the table have to say. Unless
Through
you
you,
disagree.
Mr. Chair, yeah, I think 2 or 3 would be the maximum number, because all of us are busy on a lot of other committees. And those that are really interested in these, not that all of us aren't interested, but we have to have faith in the people that are on the committee, plus our great members we have from the public.
Mr. Chair, is that including you with 3 I understand that after a quorum is what, 4?
Quorum's 4.
Do you need quorum though?
Sorry, through you, Mr. Chair, you only require to have quorum for council. A committee quorum could be 3 members of council plus the 2 residents. The quorum would make up the number of membership.
Yes, I understand, but what I understand also is that if we get 4 council, then it's a
Council meeting.
council meeting, is that?
That would be correct. I think that the intention was to have the chair would be included in that membership. So if you were to appoint 3 members, let's say, of council, then your quorum would be the 3 members plus the 2 residents. So you would have a membership of 5 individuals.
So that'd be 2 councillors and 1 chair.
Yeah, 2 councillors, 1 chair.
One chair.
Yeah.
Okay, I think that makes sense.
Well, and I thought that's where we were going first, and that it was optional for counselors to come to the audit committee meeting, but now we're finding out that, no, we're all on the audit committee at this point in time, so, yeah. What number do we think is reasonable?
I think the chair plus two.
I agree with that.
I agree.
Okay. So we'll make the motion, okay, so why don't I read that? That the committee recommended council to amend the Pelham Audit Committee terms of reference membership from all members of council to 3 members of council?
Correct.
Okay. So could I have a vote on that, please? Okay. So I guess and that's carried. So the next question would be, who would like to be on the committee besides myself and Michael and Bill? Councillor Corr, anyone else?
We all want it.
Through you, Mr. Chair, I've noted the individuals who are interested, and council will appoint them by resolution at the next meeting.
Okay, perfect. Okay, thank you. All right, so moving the agenda along, management summary of financial statements, and I know you highlighted a few of those things.
Yeah, so, through you, Mr. Chair, this is just the attachment that accompanied the financial statements. Just thought it would be helpful as you're reading the statements to get an explanation of why things have gone up or down. So, everyone's had a chance to read them.
So do we have any questions with respect to the management summary?
Most of them have been answered.
Yeah, I think so. Give everybody a couple of minutes. Not gonna let you off the gas. Not gonna let you off.
So actually, through you, Mr. Chair, so under other revenue, so we have outstanding donations for the community center. So we would use the number of the total outstanding, so the total outstanding is 600,000, or that's just what the amount is that is foreseeable to be collected in the next, what, like, is that the total?
Nope, through you, Mr. Chair, the other revenue is that we received $600,000 this year in revenue for the MCC.
So that's just this year,
That's this year.
2019,
That was 2018.
2018,
Yeah.
okay. And then, so the total amount then was over
3 million.
3 million. And then we have, that'll drag out for the next umpteen years, right?
Correct.
Do we have an idea of what umpteen represents? That's I believe that's the correct term, right? Yeah. Umpteen. That's like 10 years, 20 years?
The longest donation is 25 years.
Okay.
24 now.
The majority of the pledges, though, are within the first 10 years.
And if I recall correctly, that part of that lump of money is going to be debentured.
1.7 million.
Yeah.
As part of the 2019 operating budget. It's the shortfall of the pledge period.
Through you, Mr. Chair, am I correct in saying that we won't be receiving any more federal gas tax funding grants? I thought that was the Ford government.
Through you, Mr. Chair, the federal gas tax, we have a long-term agreement for it, and we're actually supposed to receive twice what we normally receive this year. And OSIF, the Ontario Community Infrastructure Fund, is another one of our major capital grants. It comes from the province, and so that is a grant that could potentially be affected by the government, but at this time we have no announcement saying whether it would increase or decrease.
So we wouldn't have any rough idea on what that OSIF amount would be.
Through you, Mr. Chair, I only know the current year amount, which is the same as what we received in 2018.
Which was how much?
I want to say approximately $295,000.
Thank you. So any further questions with respect to the management report? Okay, hearing none. So agenda item 7.0, management summary of financial statements dated May 13th, 2019. That the Pelham Audit Committee receive the management summary of the financial statements as presented by the Treasurer, Teresa Quinlan. All those in favor? So carried. Okay. So next, questions to the auditor or the treasurer. So we'll open it up a little bit, so.
So through you, Mr. Chair, this is the point where staff leaves the room and you go in camera to ask the auditors any specific questions that you want. So it's an opportunity for the audit committee to ask the auditor whatever you want, if there are any questions that you have.
Okay, so do we have to go in camera if,
For that part, you do,
Okay.
we have to leave.
all right,
Yeah, so we'll leave, staff will leave, guests will leave, and then,
okay.
no, you have to always stay.
Someone's got to record.
You gotta record everything. So we'll leave.
Just asking, Nancy. I didn't think there was an in-camera component. You don't mind just holding?
It's like he wasn't home. You take him into the room, everyone's calm.
Yeah, you wouldn't record it, this part's not being recorded.
It's not recorded, so.
I'm just checking with Nancy. I wasn't aware of going in camera.
Okay, yeah.
We're doing it now.
He trusts that the Sulphur Spring and the Poth Road projects have been listed. Have you ever heard of this Investing in Canada infrastructure program?
Have a motion to move in camera.
That's Canada, that's federal.
I know,
Provincial.
but did you
Just
get any of
checking
that?
with
I'll
Nancy.
make that motion.
Well, why not? It's due on the 14th, which is
We can only move in camera
tomorrow.
of the municipal act. So when you're selling millions, you're talking about identifiable individuals. So I'm just trying to understand.
This is where the audit committee can ask questions about staff, so that's why it pertains to a
Oh,
person.
about staff.
Yeah, or anything, they can ask any questions about the treasurer, or anything, you know.
Identifiable individuals.
Yes, which is us, yeah, Charlotte and I, so it's just,
Oh.
your opportunity to say, if you have any concerns, you can ask the auditor in confidence. So this is part of,
Okay.
so that's why.
It was for identifiable individuals. Okay, just one
I've seen
second.
municipalities, yeah, they use the identifiable individuals or the concern over the assets of the municipality. I forget the exact wording of that.
Right, no, I'm aware of that section. So does the committee wish to go in camera to discuss identifiable individuals?
Yes.
Yes.
I just have Nancy.
Oh, thanks, Nancy.
So you thought you were off the hook.
So through you, Mr. Chair, there are some provisions in the Municipal Act to permit the Audit Committee to go in closed session. I'll read them specifically, but it would need to be preceded by a motion.
Yep.
Firstly, would be a trade secret or scientific, technical, commercial, financial, or labor relations information supplied in confidence to the municipality, which, if disclosed, could reasonably be expected to prejudice significantly the competitive position or interfere significantly with contractual or other negotiations of a person, group of persons, or organization. Or a trade secret, scientific, technical, commercial, or financial information that belongs to the municipality or local board and has monetary value or potential monetary value. So I would suggest it would be that one, J. That would, so it's section 239(2)J, to permit the audit committee to ask questions of the auditor without the presence of the treasurer and deputy treasurer. So you would need to have a motion
Yep.
citing section 239(2)J